Most people panic when they hear the word inflation, but the rich, they smile because while prices rise for everyone, they know how to make inflation work for them. Here's a truth that might sting. Inflation doesn't make everyone poorer. It just widens the gap between those who understand money and those who don't. In this video, you're going to see exactly how wealthy people view inflation differently, how they use it, plan around it, and even profit from it, while most people unknowingly lose. By the end, you'll see inflation not as a monster to fear, but as a wave you can ride, the hidden divide. Let's start here. Inflation is simple. It means the value of your money goes down and the price of everything else goes up. For most people, that feels unfair. You go to buy groceries that cost more than last month. Your paycheck doesn't stretch as far. You feel like the system is rigged, and honestly, it kind of is, but not in the way you think. The system rewards owners, not savers. It rewards people who hold assets, not cash. That's the secret the rich have known forever. When inflation rises, your money buys less. But assets, things like real estate, stocks, businesses, often rise with inflation. So while prices rise, so do their portfolios. Meanwhile, the middle class holds savings and slowly drowns in rising costs. Problem. Here's the trap most people fall into. They think saving is safe. Let's say you saved $10,000 last year. This year, inflation rises 5%. That means your money can now only buy $9,500 worth of goods. You didn't lose it, but its power vanished. Now imagine a millionaire who used that same $10,000 as part of a down payment on an income-generating property. Rent rises with inflation. Property value rises too. While you're losing purchasing power, they're gaining equity. It's not luck. It's mindset. The poor see inflation as an enemy. The rich see it as a signal, a reminder to own things that fight back. Exploration. Let's dig deeper. The rich don't just protect themselves from inflation, they use it strategically. How? Let's look at 3 core principles. 1. They understand debt differently. When inflation rises, the value of money drops, including the value of money you owe. That means if you have a fixed-rate loan, inflation actually helps you. Example, if you borrow $100,000 today and inflation rises 10%, that $100,000 debt is now effectively worth only $90,000 in today's money. That's why wealthy people don't fear good debt. They use it to buy assets that rise faster than inflation. Your mortgage becomes cheaper in real terms, while your property becomes more valuable. Meanwhile, most people avoid debt entirely, thinking all debt is dangerous, and they miss out on leverage. They convert cash into assets. When regular people get extra money, they save it. When the rich get extra money, they invest it. They know that inflation eats cash like rust eats metal. Every dollar sitting idle is quietly shrinking. So they pour money into assets that either produce income or grow with inflation. Real estate, stocks, businesses, commodities like gold, or even Bitcoin in some cases. They're not chasing trends. They're moving money into things that move with the times. They price their life in assets, not dollars. This one's subtle but powerful. Most people think in prices. How much does this car cost? How much is that house worth? The rich think in value. How many months of cash flow will this car take from me? How much will this property pay me back every year? They measure money by what it can do, not what it can buy. And that shift in mindset changes everything. Let's make this real. Meet Daniel, a teacher. Every month, he saves $300 in a bank account. He's proud of being responsible, and he should be. But over time, inflation quietly eats away at his savings. Now meet Alicia. Same $300, but instead of saving, she invests it in a low-cost index fund. It's not risky, it's long-term. Over the next 10 years, while Daniel's money loses 25% of its value, Alicia's doubles. The difference? Daniel stored money. Alicia grew it. Both worked hard. Only one thought like the rich. Here's where it gets deeper and a little uncomfortable, because while most people are told to cut expenses to survive inflation, the rich often do the opposite. They spend strategically, but on assets that make them richer because of inflation. In the next part, we'll break down exactly how they do that, and how you can too. So before you move on, remember this: saving money doesn't protect you from inflation. Thinking differently does. When prices skyrocket, most people freeze. They stop spending, cut costs, and hope inflation passes. But the rich? They move. Because inflation isn't a storm they hide from. It's wind in their sails. In part 1, we learned how the rich think differently about money, how they use inflation to protect their wealth. Now, we'll uncover how they go one step further. They turn rising prices into profits. And here's the wild part. You don't need millions to start doing it. You just need to think like they do. The power of cash flow. When inflation rises, prices climb, but so do rents, wages, and revenues. If you own something that generates income, inflation becomes your ally. Let's compare two people. James has $100,000 in savings. Laura has $100,000 in a rental property producing $800 per month. As inflation rises, James's savings lose value every month. Laura's rent rises with inflation, turning the same problem into a pay raise. That's cash flow leverage. The rich structure their lives around income streams, not salaries. They own businesses, real estate, stocks with dividends, assets that pay them even while prices rise. And the best part, inflation often pushes those income streams up. The poor work for money. The rich make money work for them. Robert Kiyosaki. Inflation punishes workers, but rewards owners. The debt advantage. Here's a secret weapon of the wealthy. Good debt becomes cheaper during inflation. Let's say you borrow $500,000 at a 3% fixed rate to buy an apartment building. If inflation rises 8%, that 3% loan is now effectively free money, because the dollars you repay are worth less than the dollars you borrowed. Meanwhile, rents rise, property values rise, and your debt stays fixed. The rich don't fear debt, they use it like a lever. They borrow in weak money, cash, to buy strong assets, property, businesses, resources. Over time, inflation erodes the debt, but the assets grow stronger. That's why the wealthy love long-term fixed loans in inflationary times. They're paying back tomorrow with cheaper dollars. You might think, but that sounds risky. Yes, if you borrow to buy liabilities. But when you borrow to buy assets that produce income, inflation actually works for you. Ownership and pricing power. Here's another inflation superpower: control over prices. When you own a business or brand, you can raise prices with inflation. When you're an employee, you have to ask for a raise. That's a massive psychological and financial difference. Big brands, Apple, Starbucks, Netflix, do this effortlessly. Prices go up and consumers keep buying. They pass inflation on to the market instead of absorbing it. The rich invest in companies like these because they have pricing power, the ability to adjust without losing customers. Even small business owners use this principle. If you run an online course, design service, or rental unit, you can increase prices as costs rise, maintaining your profit margin. Inflation doesn't crush people who own value-producing systems. It crushes those who depend entirely on fixed income. Let's tell a real-world story. In 2022, during a spike in inflation, a man named Ethan ran a small coffee shop. Costs of beans, milk, and cups rose by 20%. Everyone around him panicked. Small shops were closing left and right. But Ethan noticed something. People weren't quitting coffee. they were just buying smarter. So instead of slashing prices, he created a subscription model, $20 per month for unlimited drip coffee. People loved it. Predictable spending, local support, and Ethan got stable recurring income. Inflation didn't destroy him. It forced him to innovate. A year later, his profit margins were higher than ever. That's how the rich, or those who think like the rich, survive inflation. They adapt faster than the economy changes. Let's break down where wealthy people actually put their money during inflation. 1. Real estate. Real estate is the classic inflation shield. Property values rise, rents climb, and debt becomes cheaper. It's tangible, and it produces income. But here's the trick. Wealthy investors focus on cash flow, not speculation. They buy properties that earn now, not maybe one day. 2. Stocks. Many people fear the stock market during inflation, but the rich don't. They buy companies with pricing power, those that can raise prices and still sell. Think consumer staples, tech, and energy. Dividends grow, revenues rise, and over time, the stock value catches up with inflation. 3. Commodities and hard assets. Gold, silver, oil, farmland, even fine art. These are stores of real value. They don't depend on currency strength. When money weakens, tangible assets often strengthen. 4. Businesses and digital assets. Entrepreneurs thrive in inflation because they can create value out of thin air. An online brand, YouTube channel, or digital product can scale with almost zero cost. That's infinite leverage, the kind inflation can't touch. But here's the catch. Most people never reach this stage, not because they're lazy, but because they're programmed to think differently. They're told to save cash, avoid debt, play it safe. But in an inflationary world, those safe habits become dangerous. Cash loses value, debt becomes a tool for others, and fear becomes a tax on opportunity. Inflation doesn't just raise prices, it exposes who understands the game. Here's the ultimate realization. The rich don't fight inflation, they dance with it. They see it not as destruction, but as redistribution. Money doesn't disappear during inflation, it just moves. The question is, which direction is it moving for you? If your money flows into assets that grow, you win. If it sits idle, you lose. It's not luck, it's literacy, financial literacy. So how do you think like the rich? Don't fear inflation, understand it. Don't save money, store value in assets. Don't avoid debt, use it strategically. Don't stay fixed, build systems that flex. The rich don't have secret knowledge, just a different lens. They don't see rising prices as chaos. They see patterns, and they position themselves early. And now, you can too. If this video opened your eyes, remember, you don't have to be rich to think rich. You just have to start acting differently than everyone else. Hit like if you're tired of losing to inflation. Comment your biggest takeaway below. I read every one. And make sure to subscribe, because in the next part, we'll show you how to build your personal inflation-proof portfolio. Inflation is just the scoreboard revealing who studied the rules. If inflation is a fire, most people panic and grab water. But the rich, they grab marshmallows because they know how to use the heat. Inflation doesn't have to burn your future. It can fuel it. If you understand how to turn every rising price into a stepping stone toward freedom. Mindset of control versus fear. Let's start with the truth. Inflation is not the enemy. Ignorance is. The reason most people lose during inflation isn't because the system is unfair. It's because they never learn the rules of the game. They react emotionally, not strategically. When prices rise, the poor get scared. The middle class complains, but the rich? They calculate. They ask, how can I make inflation work for me? This is the mindset of control. It doesn't deny fear, it redirects it. Think of inflation like ocean waves. You can't stop them, but you can learn to surf. And the difference between sinking and surfing isn't strength, it's skill. The wealthy focus on what they can control: their income streams, their investments, their spending habits, their mindset. While everyone else stares at the price of milk, the rich are looking at asset charts. While others cut back, they double down on ownership. Here's a small mindset shift that changes everything. Don't say, inflation is ruining my money. Say, inflation is testing my strategy. That's the moment you stop being a victim of inflation and start being a student of it. Step 1. Build your base. You can't play offense if your defense is weak. That's why the first step to thinking like the rich is stability. Inflation amplifies whatever financial situation you already have. If you're living paycheck to paycheck, it'll feel like drowning. But if you've got control over your cash flow, it becomes just another tide. So how do the rich build that base? 1. Track every dollar. Most people are afraid to look at their numbers. The rich treat them like a dashboard. You can't steer what you can't see. Use tools like YNAB, Mint, or even a notebook. The goal isn't to judge your spending, it's to understand it. 2. Build a cash cushion. Inflation doesn't erase the need for savings. It changes how you hold them. You still need an emergency fund, 3 to 6 months of expenses, but park it in high-yield accounts or short-term treasury ETFs. That way, your cash works a little harder while it waits. 3. Eliminate bad debt. Inflation rewards good debt, but destroys those carrying high-interest credit cards. The rich differentiate between debt for assets and debt for lifestyle. Pay down what bleeds, keep what breeds. These steps don't make you rich overnight, but they keep you in the game. Step 2. Start owning things that grow. Here's the golden rule. If it grows faster than inflation, you win. That's why the wealthy obsess over ownership. Let's break down how ordinary people can build the same structure, step by step. A. Own businesses, even tiny ones. Not everyone can start a company, but everyone can own a piece of one. That's what the stock market is, fractional ownership. The rich don't see stocks as charts. They see them as tiny businesses that sell real products. Pick companies with pricing power, brands that can raise prices without losing customers. Think Apple, Coca-Cola, or Procter & Gamble. You're not just buying stock, you're buying a shield against inflation. B. Own real estate, even digitally. You don't need millions to get into property. Start with REITs, real estate investment trusts. They pay dividends from rent income and rise with inflation. Over time, you can move into physical assets, rental units, Airbnb spaces, or co-owned real estate platforms. Inflation raises property values and rents adjust upward. While everyone else's rent rises, you're the one collecting it. C. Own commodities and alternative assets. Commodities are nature's currency. Gold, silver, oil, farmland. These thrive when money weakens. Even modern equivalents like Bitcoin share that quality. Finite supply in an infinite print world. The rich hold part of their wealth in hard assets because they trust scarcity over promises. D. Own skills. Yes, you are an asset. Inflation can't touch knowledge that compounds. When you upskill in digital marketing, finance, coding, design, your income potential rises faster than inflation ever could. Step 3. Automate your wealth system. The rich aren't rich because they make perfect choices. They're rich because they make consistent ones. Automation is their secret weapon. Here's how they structure it. Automate investments. Use dollar cost averaging, DCA. Buy every week or month, no matter what the market's doing. This turns volatility, inflation's best friend, into your best opportunity. Automate savings. Send money automatically to high-yield accounts or bonds before you ever see it. What you don't touch, you don't spend. Automate growth. Reinvest dividends, compound earnings, and build snowball momentum. When you automate your money, you stop relying on willpower, and that's when you start behaving like the wealthy. Calm, consistent, confident. Behavioral psychology of wealth. Here's the truth no one talks about. Inflation hurts emotions more than it hurts wallets. Fear makes people sell investments at the bottom. Panic makes them hoard cash right before a rebound. The rich aren't smarter, they're calmer. They understand a timeless rule: in chaos, the disciplined profit. Think back to every financial crash: 2008, 2020, 2022. While the crowd sold in fear, the rich bought assets on sale, and when recovery came, they doubled or tripled their wealth. That emotional discipline, the ability to stay patient, is the richest skill of all. You can start training it right now. Delay unnecessary purchases, study markets instead of headlines. Remember that value always returns to those who wait. Money follows patience, always. The hidden gift of inflation. Now let's flip the script completely. What if inflation is actually your wake-up call? Every price increase is a reminder that the old system, save, spend, hope, is broken, and inflation is forcing us to evolve. Think about it. Inflation doesn't just raise costs, it raises awareness. It pushes you to learn, to own, to create, to take control. If your grandparents learned how to survive recessions and your parents learned how to get jobs, you are the generation learning how to build assets. Inflation is just the pressure that shapes diamonds. And those diamonds are people who finally decided to master money instead of obey it. Let's bring it home. The poor panic, the middle class complain, the rich act. They don't see inflation as loss, they see it as leverage. When the value of money drops, they don't cry, they convert it into assets. When fear spreads, they stay calm because they've already built the system. You can start today, even with $10, because it's not about the amount, it's about the approach. The rich aren't born different. They just ask better questions. Not, why is everything getting more expensive? But, how can I make inflation pay me? Inflation is here to stay, but so is opportunity. Every wave of rising prices creates a new class of wealth builders. The question is, will you be one of them? Start small, learn fast, own something, build something, and never again let your money sit still while the world moves on. If this video changed how you see inflation, don't stop here. Hit like, share this with someone who's still scared of prices, and make sure to subscribe, because the next video will show you how to turn any income into real inflation-proof wealth.